Hello traders, I want to welcome you back to your FXCM YouTube channel. My name is David Londoño, I'm a trader and I also do market analysis, and that's what we're going to do on this video. We're going to be talking about strategies to identify and capitalize on significant price movements after breaking key levels. So first of all, we have to understand what those key levels are. We're going to be using Bitcoin as our instrument for this example, and the key levels will be in two forms. There will be liquidity in the form of older highs and older lows, and inefficiencies in the form of gaps. Let's start saying or explaining why we consider these older highs and older lows as liquidity. For example, right here we have these older lows, and that's where the retail traders will be placing their stop loss just below that. When they are placing here their buys, they are buying right here because they consider this as a strong bottom place, and maybe we're bullish, so they're considering that, and all the stop losses that we're placing before we have this rally are just below these prices. So that's why once we break those levels, that when we break the structure, we had higher high, higher low, higher high, higher low, then we fail to do a higher high and we break the level, we break the lower low. So that's a sign that we're hunting those stop losses. That's what we want to watch. That's how to identify and we can capitalize those significant price movements. It also works in the opposite direction. After that, we were going on a downtrend or a bearish trend. We had lower lows, lower high, lower low, lower high, lower low. Once again, capture liquidity right there. And then we changed on the structure. We changed because we had a higher high and we failed to do another lower low. And that's when the second key level comes into the strategy, the inefficiency in the form of gap, because what we did, it wasn't meaning to capture the liquidity just below here, but just organizing or feeding this inefficiency in the form of this gap right there. Fill the inefficiency, not fully, and then change the structure, fully change the structure to do higher highs and higher lows. At this place, this moment, we will be considering placing our orders. That's something we will never, and no one will ever know for sure, but we will be considering a rally and a volatile movement in order to capture. If right here we capture liquidity right there, and then we change the structure in order to capitalize on lower lows, then right here we will be considering just the opposite. Then we had capture on the lower low, change on the structure, and then we will be expecting a rally in order to capitalize on where the liquidity was placed or left just before that higher high. Right now, we are on a limbo place, we could say, because the price hasn't shown a place to go right now. We filled the gap. Remember, that's our second key level, and then we're more likely to go to capture liquidity again. So the price is always moving between these two key levels. That's what we want to watch. That's what we want to be considering in our strategy. Where is the liquidity place and which are the inefficiencies we are going to fill again? Now, this is something that comes with practice and practice and practice. So this is something I will just want to show you in the charts. If you like this kind of videos, don't forget to share and subscribe. Also click on the like button. Place your doubts so we can continue working on this strategy, because it has so much to offer and we also have so much to cover on it. So I hope I'll see you in the next video, guys. I'll see you in the next training session.